Hey guys, what's going on? It's Rekt Capital and welcome back to the Rekt Capital channel. We're almost at 20,000 subscribers here on YouTube. Thanks so much for the support. Today we're going to be talking about a historic MACD right over here in a confluence with a 3-week higher low, where you're seeing a low, higher low, higher low, premium buying, dip buying, apologies, and also a macro higher low as well. Because this candle body right over here is lower than this candle body right over here. So a macro higher low, a 3-week micro higher low, and a historic MACD deviation towards the downside. And we're going to be talking about this historic MACD deviation in more detail in this video. Subscribe to the channel for more videos like this in the future. And let's just showcase how historic this MACD situation is right now. You can see that the very bottom of this diagram for the MACD, well, there's been nothing like it in the past. You can see this deviation is totally just blows all the previous deviations on the histogram out of the water. This is, of course, the weekly MACD. So you can see how from November, pretty much, we've had positive histograms, green histograms on the MACD, and ever since really getting close to the 60,000 region, we've been having bearish divergences on the MACD, a declining tendency on the histogram, and this declining tendency continued right over here until we got to a low point here on the MACD, and it's just historic right now because we're having lower lows on the MACD right over here, but we're actually having higher lows on the price action. Guys, that's the very definition of a hidden bullish divergence when you're seeing lower lows on the histogram, on the MACD histogram right over here, coupled together with higher lows in the price action. That is a hidden bullish divergence. But of course, we don't have a crossover, and it's nowhere close to being a crossover here. In fact, we got a bearish crossover a few weeks back in mid-April, roughly speaking. So we're still seeing a lot of divergence in the two MACD moving averages, but the histogram already itself is really overextending towards the downside. We're seeing lower lows and higher lows on the price, so hidden bullish divergence, overextension towards the downside, no convergence in these MACDs, moving averages in the MACD at the moment. But once we do see convergence and we see a crossover, then of course, this being a lagging indicator, that will be a little bit late for timing the bottom or trying to time that bullish trend reversal, because once we get that crossover, it's already too late given how lagging this indicator is. But of course, we have a few positive signs already, barring this crossover, of course, which is nowhere near. That's the weekly time frame. Positive signs on the weekly time frame. Let's focus on the daily time frame. And of course, you can see that this daily MACD is even more extreme than the weekly one. So let's go back here. Of course, the weekly crossover and the weekly moving averages are still in the upper half right over here rather than in the lower half. Only the histogram is showcasing extension towards the downside. But when it comes to the daily MACD, you can see how not only are the histograms towards the downside, but also the moving averages themselves are really overextended towards the downside. And by standards of history, you can just see how extreme this historic MACD situation is right now. So let's zoom in here onto the daily time frame just to focus on what's going on in terms of this MACD. So you're seeing already here in the moving averages themselves, you're seeing a higher low and you're actually seeing lower lows on the price action. In the candle bodies, of course, because in the wicking price action, you're seeing higher lows. So higher lows in the wicking price action and higher lows on the MACD, that's a great sign of strength already. But the fact that we're seeing lower lows in the candle bodies, and of course, these are clear lower lows in the candle bodies, but this is now leveling out to the point where we're seeing a double bottom-like formation happening, coupled together with that bullish divergence, this uptrending moving average right over here. These are really great signs of a bullish divergence in of itself. Not only on the moving average itself, but on the histogram where we're seeing a bullish divergence on the histogram as well, and in fact the histogram is turning into the green area, which is always a positive, because whenever we see extended periods of green histograms, you can see that that translates into downside, or at least upside, apologies. You can see how the green histograms are, they always go together with upside. And of course, when we see weakening in that upside, you see declining histograms, bearish divergence in the histograms, like over here as well. Bearish divergence in the histograms and bearish divergence coupled together with the price action. So in any case, guys, the most important thing is that this is a historic deviation in the MACD, and we're seeing a lot of bullish signs on the daily time frame. Of course, on the weekly time frame as well, but these moving averages are still nowhere close to actually converging. They are still in the upper part of the MACD. We always like to see moving averages in the lower part if we can get them. But of course, over the past year or so, we've seen such deviation in the moving averages into the upper half of the MACD that will take some time for us to even try and get closer towards the 0 point on the MACD, let alone into the negative territory. But the daily time frame is showcasing a different story altogether. You're seeing really just that downside deviation, that cool down is pretty extensive, really historic stuff, and bullish divergence on the moving averages, bullish divergence on the histogram, bullish divergence on the price action itself, higher lows right over here, and we're already pretty much in a really key historical area of demand. Based on what we've seen earlier this year, we're rebounding from it at a higher low. Really positive stuff. The last thing that I'd like to perhaps mention here that could be of use to you guys is that we're also maintaining the histogram, downside histogram support. So we always see this sort of, at least this year in 2021, we see a curling up from this support. So a rounded bottom in the histogram, rounded bottom in the histogram, and so on and so on. And here even we see a deviation beyond that support, but now recovering. And that recovery in the histogram actually hasn't really translated into a recovery in price action, which is really interesting to see, because we're seeing hidden bullish divergences on higher time frames, bullish divergences mounting here on lower time frames, and these perspectives coupled together are translating into something truly interesting, especially since we're in really historic territory for the MACD, both on the daily time frame, especially on the daily time frame, but also on the weekly time frame itself. We haven't seen these sort of levels in a while, and in fact on the daily time frame we've never seen those downside levels before. So it does look like we're overextending towards the downside, and we're probably going to snap up in terms of the MACD. And now we just have to watch out for how the price action is going to translate into that MACD bullish divergence. So historic MACD situation right now, lots of confluence, lots of positive stuff here going on. And as long as we just maintain above the 30k region, then we can't talk about downside just yet. In any case, guys, that's about it for today's video update. Subscribe to the channel for more videos like this in the future, and like the video if you like this content and would like to see more content like this in the future. Thanks so much for joining me in today's video. Hope you're having a wonderful day wherever you are in the world. I'm Rekt Capital, and I'll speak to you in the next one. Speak to you soon.